Alright, hi guys, welcome back to PKFX YouTube trading channel. So this is a quick update on the USDCHF trade that I entered. So as you can see, upon entry, the market only ranged for a few hours. It went to our direction, but eventually the 4-hour candlestick literally just created a wick and then closed upwards, and thereafter the 4-hour candlestick literally shifted the structure back from a sell into a buy and rallied all the way to the stop loss. In fact, it is still heading towards the up direction. So clearly, this particular trade, even though it had very high confluences and met all my strategies, and in fact, I kind of doubled down on this particular trade and I reached 1% instead of 0.5%. Because I was pretty confident that it was going to go down. But despite all the fact, despite all the confluences and all the strategy, the market literally decided to do what it does. It just rallied upwards. So I wouldn't say that I was disappointed with this trade. This is something that I cannot predict. And that's why I always say when it comes to trading, it's pretty much a probability basis. It's 50-50. It can go up or it can go down. But we try to manage the trades accordingly, and we try to align the confluences to our benefits so that the edge will eventually move from being a 50-50 trade into a 60-40 or a 70-30 in our favor, right? So in this particular situation, I've already journaled this trade as a loss. This was a straight up loss. However, I'd like to just quickly recap on what really happened over here. So as you can see over here, this was the previous higher high and this was the previous higher low. And I mentioned that when the 4-hour candlestick, which is this candle, when it broke down from this, so the structure moved from buy into a sell, making this as the lower low and this as the lower high. So the market literally shifted from buy into a sell, and upon entry, which I thought was just a pullback over here where I entered, the market shifted back again into a buy. So this is completely unforeseen. The market sometimes tend to do this, not all the time, but this is, I would say, those instances when the market are literally ranging at a location, right? I thought this was my entry signal and this pullback was sufficient. However, the market decided to just shift completely into a buy and rallied all the way up. So there's no any significant lesson learned over here. In fact, if I go to the 30 minutes candlesticks, I can say that upon entry, we had all our confluences aligning. When the market made this pullback, the 30 minutes, this was the lower low and this was the lower high, and the 30 minutes EMA was in our support. The round psychological number was in our support. In fact, if I look at the 1 hour, it was also the same thing. Everything was aligning for a sell, and we entered upon this pullback and it started going down. So things was going good. However, the market decided to shift the structure and break all these EMAs in the 30 minutes, 1 hour, and the 2 hours and the 4 hour as well, and then eventually started rallying up. Now I was confident in doubling down this particular trade because of the daily EME. If you can see, this is the daily candlestick, so the daily EME was also coming in as a resistance. But what I didn't foresee was such a strong candle today upon opening to completely shift the direction towards the upside. So if this candle were to close like this, now the daily technically didn't have any sort of a reasonable pullback and literally just rallied upwards, right? So at this point of time, the 4-hour will also change into a buy. In fact, I can right now adjust this, but before I do that, let me just show you this 2-hour that I was aiming for. So I mentioned previously this was the previous 2-hour lower low, and sorry, this was the 2-hour higher high, and this was the higher low. And this particular candle over here did not break the 2 hours. So the 2 hour was technically still bullish upon entry. And that held true because the 2 hour, what it did is literally it rallied all the way up, maintaining the 2 hour as a buy. And this 2 hour was a buy, shifted the 4 hour back into a buy as well. So this is why it is very, very important to set a reasonable stop loss, but most importantly is to set a stop loss. I've had in my past where I took trades without setting a stop loss. So this entire region to stop me out was never there. And this sort of rally over here on the market, I would have held this particular trade completely, and my losses would have been, if it keeps rallying upwards, it would have been double. It is very, very hard to control your emotions when the market is rallying against you instead of together with you. So putting a hard stop is essential. In fact, right now, every single trade that I'm taking, I'm putting a hard stop so that there is a limit in controlling the losses, so that I can preserve my capital. So one lesson learned that I've learned over here is the importance of having an ideal stop loss in the case where you're pretty confident that everything is going to go in your direction, but the market just chooses to reverse and literally just fly up on the opposite direction, right? So that is one lesson learned over here. I've already journaled this particular trade accordingly and marked it as a loss as well. So over here, I've mentioned clearly on the journal that my emotion, I risked only 1% for this trade. My emotion was still calm. The trade reason for me to enter this particular trade, the weekly and the 4-hour was a sell. In fact, I entered after the 4-hour changed to a sell. The daily EMA and round psychological number to act as a resistance, the shift of structure in the 1 hour and 30 minutes candle, all this was the reason for me to enter. What could have gone wrong, which in this case, that is what happened. The daily is a buy to retest the EMA. But I entered because of market position where I see the daily EMA to hold as resistance and push the market downwards to pro trend to follow the weekly pattern, right? However, the daily buy trend still held true and it continued to be a daily buy trend. So the results, nothing significant to learn over here. Upon entry, market just shifted the structure in all time frames, including the 4-hour, into a buy and went straight to SL. So that is literally what just happened. And I would still say the only solid lesson learned that I can see from here is to have a hard stop loss to limit the amount that you're risking per trade, right? So what can I do next for this particular trade? In fact, right now, the 4-hour candlestick is no longer, right? If I look at the 4-hour candlesticks, it is no longer a sell. Market has already shifted into a buy. This is an ongoing structure, and I can see that the market, the 2-hour candlestick is no longer valid. So the market now is a buy and it's continuing to rally up. Now, if the candle for the daily closes like this above, then the daily and the 4-hour will now turn into a buy. So I could consider like some sort of a pullback in order for me to and then consider for a buy, something like this. But in order for me to do something like this, I need the market to close today, and when it opens tomorrow to come back and retest, and then the next day when it's pushing up, then it would be a good entry point, right? So I'm gonna literally just update the trade as of where the market position is as of today. It's only Tuesday. Today is pretty much only Tuesday, so we still have a few more days to go. I could probably look for another trade. One thing that we don't want to do is taking a revenge trade just because that we lost this trade. So that's why it's important to journal and then update all the trades and just treat it as one trade and it's done and dusted and move to the next trade, right? There will always be another better trade. So also it is important to not risk the whole amount that you have or a big percentage from your capital that you have when you're confident with any one trade. This is a very good example where I was super confident that this is going to go down. I risked 1 to 2.5, which is an ideal risk to reward ratio. I doubled down on the trade. The risk amount that I usually risk, I doubled down on the amount, and everything was in my favor until it's no longer not in my favor, right? So yeah, I'm pretty sure that this would have happened to a lot of people out there, and it can happen to me as well. And the best lesson learned is to put a freaking stop loss, like a freaking hard stop loss, so that you're not trading based on emotion and it's just numbers and you're done. All right, guys, so that's about it. USDCHF, I tried to sell and I took a loss over here, and I will continue to monitor for future trade updates. Thank you so much for your time and have a good day.